Stop scrolling. Right now, there are $568 billion being discussed in Washington that could land in your bank account. But here's the catch. Most people won't know if they qualify until it's too late. A $2,000 check for almost every American, already promised publicly by the president. A tax refund in 2026 that could be $500 to $1,000 bigger than normal, already written into law. So which one is guaranteed? Which one is just political theater? And why is nobody telling you the truth about who actually gets left out? Stay with me for the next 10 minutes, because I'm about to show you the exact numbers, the real eligibility rules, and the one thing you need to do right now to make sure you don't miss out. 1. The truth nobody is telling you. Let me be brutally honest with you right from the start. There are two completely different money situations happening right now, and the media is mixing them together to get clicks. Story number 1, a proposed $2,000 tariff dividend. Direct cash payments funded by taxes on imports. This has been publicly endorsed multiple times by the president, but it's not law yet. No bill has passed Congress. No dates have been set. No official eligibility rules exist. Story number 2, a 2026 tax refund surge. This one is already law. Tax rules changed in 2025, and millions of people will see bigger refunds in early 2026 because of it. Banks are already forecasting an average refund of $3,700 plus, about 15% higher than last year. One is a political promise, the other is baked in reality. And if you don't understand the difference, you could fall for scams, miss out on real money, or make financial decisions based on things that may never happen. So let's break this down properly. No hype, just facts. 2. What is this $2,000 tariff dividend? Here's the exact quote that started all of this. A dividend of at least $2,000 a person, not including high-income people, will be paid to everyone. That's a direct statement from the president, not from a random politician, not from a think tank, from the top. So what does it actually mean? The idea is simple. Take money collected from tariffs, basically taxes on imported goods, and send part of it directly to households as cash. The proposed amount, at least $2,000 per person. Who's excluded? High-income people. But that term hasn't been officially defined yet. In previous stimulus rounds, high income usually meant over $75,000 a year for single filers, over $150,000 a year for married couples, with phase-outs above those thresholds. If they use similar rules, roughly 85% of Americans could qualify, just like the $400 checks in 2021. But here's the problem. This is still a proposal, not a law. There's no bill number, no congressional vote, no IRS instructions, no payment dates. It's been endorsed publicly. It's been repeated multiple times, but it's not approved yet. And that's a critical distinction. 3. The math. Is this actually feasible? Now let's talk about the part everyone ignores. Can this actually be paid for? If 284 million people qualified, similar to the last stimulus, and each got $2,000, the total cost would be $568 billion. So where does that money come from? According to public statements, tariffs are currently bringing in about $1 billion per day, projected at roughly $350 billion per year, and about $3 trillion over a decade. Supporters say this would be deficit neutral, using import taxes instead of borrowing more money. It could be pro-growth. When people get cash, they spend more, which boosts the economy. It's a way to return tariff revenues directly to the people. Critics say tariffs raise prices for consumers and businesses indirectly. Using this money for checks is politically popular, but may not be the best long-term strategy. The numbers might force the government to scale down the checks, limit eligibility, or delay payments. Bottom line, over 10 years, the math can work on paper. In a single year, things get much tighter. That's why this is still a political fight, not a done deal. And that's why you need to understand what's already guaranteed versus what's still being debated. 4. Who really qualifies and who gets left out? Okay, so here's the question everyone actually cares about. Would I qualify if this actually happens? Based on how previous payments worked and what's being discussed now, here's the likely structure. Most likely included, workers earning below the high-income threshold, seniors on Social Security, retirement, spousal, survivors' benefits, people on SSDI, SSI, VA benefits, or railroad retirement. People with low or no income, as long as they're documented in the system. Why? Because every major stimulus check has been based on income, not employment status. Potential disqualifiers: high-income earners, once officially defined. People who owe back federal taxes. Checks could be intercepted to pay down debt. People who are hard to reach administratively. No fixed address, no bank account, no tax return on file. Important reality check. In 2020-2021, one of the biggest groups that didn't receive checks, even though they qualified, were homeless Americans. Not because they didn't qualify, but because the system had no easy way to deliver money to them. If a new dividend is approved, we could see the same distribution problems unless the system is redesigned. Again, all of this is based on patterns from the past and current public statements. The final rules depend on the exact bill Congress passes, if it passes at all. 5. What's real versus what's just speculation? Let's draw a hard line between what's actually happened and what's just talk. What has happened? The president has publicly endorsed sending tariff-funded money to households multiple times. There was a proposed $600 rebate idea in Congress as a separate concept. The $2,000 figure comes from a direct public statement promising at least $2,000 per person. What has not happened? No final bill passed by Congress. No IRS announcement with eligibility rules, dates, or application processes. No official payment schedule or guaranteed timeline. What this means for you? Do stay informed. This is a serious proposal with real political momentum. Don't plan your budget as if this money is guaranteed. Don't trust any email, text, or phone call asking you to apply or pay a fee to receive the money. That's a scam. The honest answer right now is this: the political will exists. The legal and logistical structure is still missing. Until that gap closes, this stays in the category of serious possibility, not confirmed reality. 6. The 2026 silent stimulus what's already law. Now let's talk about the other story, the one that's already baked into law and almost nobody is talking about. A major tax overhaul passed in 2025 changed the rules for millions of people. These changes, backdate to the beginning of 2025 for many taxpayers, will show up as larger tax refunds in early 2026. Here's how it works. All year long in 2025, your employer has been withholding taxes from your paycheck under the old rules, especially in the first half of the year. Then a new law came in mid-year and lowered your tax bill for the whole year. That means you may have overpaid, and the IRS will refund the difference. That's your tax refund surge. Forecasts are already estimating an average refund of around $3,700, roughly 15% higher than the previous year, about $500 more on average. This isn't an average for everyone. Some will get more, some less. But for millions of households, it will feel like a mini stimulus check. And unlike the tariff dividend, this is already law. 7. Who benefits from the new tax rules? The new tax law introduces or expands several deductions and credits. Here are the key groups that could see bigger refunds. 1. Seniors 65 plus. Extra standard deduction on top of the regular one. More of their income becomes tax-free. Bigger refunds or lower balances due. 2. Tipped workers. New rule limiting or removing income tax on certain tips, up to a cap with income thresholds. For people who live off tips, this can be a game changer. 3. Overtime workers. A portion of overtime pay can be treated as tax-favored, up to a cap within income limits. If you worked a lot of overtime in 2025, the difference between what was withheld and what you legally owe can be refunded. 4. Residents of high-tax states. The SALT cap, state and local tax deduction, has been raised significantly. People in high-tax states can deduct more of their state local taxes. Lower federal tax bill.